and they've been huge buyers of gold. And so my sense is that they've made the bet on gold and have probably ignored Bitcoin. I'd like to see us, in some kind of a currency reset event, which I think will have to happen to deal with the terrible inflation that's downstream here. In some kind of a currency, reset event, I'd like to see us just skip gold and go to Bitcoin. I think it would give us a strategic advantage over, China, Russia, and the Middle East.
The value of Bitcoin is expected to skyrocket, possibly hitting between $200,000 and $1 million, and that might not even be the top. Larry Lepard, the managing partner and founder of Equity Management Associates, recently made that prediction. It's getting hard to ignore Bitcoin. Financial institutions, governments, and large investors are now closely monitoring the situation. In contrast to other cryptocurrencies, Bitcoin has established itself as the leading digital asset by demonstrating its sturdiness over market cycles and growing institutional acceptance. The long-term trend is evident, even though its price is still uncertain. According to Lepard, Bitcoin may reach between $200,000 and $1 million, and it may even reach higher levels. Whatever the precise figure, there is no denying that Bitcoin is upending the financial system and providing a potent substitute for conventional currencies. Bitcoin's influence is growing along with its adoption. This change is occurring quickly rather than gradually. As Larry Lepard shares important market insights and explains why Bitcoin is expected to dominate, be sure to watch the entire video. Consider liking or subscribing to the video if you like to stay up to date. Let's watch the video again and listen to Larry Lepard's words.
Well, so, Bitcoin's better than gold in terms of sound money. Gold is old-fashioned sound money, and it has the benefit of, it's been around for 5,000 years. Everybody knows what it is, and it's not very volatile in terms of its price. The biggest drawdown ever was right after 1980. It was like in the low 30s. As you know, Bitcoin has had multiple drawdowns of over 70%, 3 or 4 of them. And that's because we're in early days in the adoption curve, and it's either going to the moon or it's dead. The emotions on it are quite extreme. But, Bitcoin enjoys a couple of really substantial advantages over gold. One, you can verify it. You see the blockchain. Somebody say, this is my address. You can look at it and go, oh, yeah, you do have it. I get it. Two, you can move it very quickly. You can, in 10 minutes, you can do a transaction. Try doing that with gold. You got to load it onto an airplane or boat, and it's heavy. You got to verify it, and there's been a lot of fake gold out there. There have been guys who they're bleached in China where they were taking tungsten, which is close to the same weight, and coating it with gold, saying it's a gold bar, but it was really a tungsten bar with a gold wrapper on top of it. And you can lie about how much of it you have because it's centralized, not distributed, whereas Bitcoin is distributed, not centralized. So everyone can look at the entire blockchain and know where the coins are and how many are in each address and so on and so forth. That's verified on a regular basis. So, China claims they have a certain amount of gold. I think they have more than they claim they have. We claim we have a certain amount of gold. I think we have less than we say we have. It's just a more opaque market. And, when Bitcoin got invented, they created triple entry accounting, a debit and a credit, but also a third entry, which is somebody can look at it, the ability to see it from outside the system. You can go and see the address and see that the money's really there, which is a very powerful idea. Right. Well, we know El Salvador did. We know Bhutan has. We know, the U.S. hopefully hasn't sold the 200,000 coins they have, and they're talking about a strategic crypto reserve. I was in the Middle East in December, and we subsequently learned that what I heard as a rumor there is in fact true, which is that the United Arab Emirates has been hodling Bitcoin. So has Oman, so have the Saudis. From what I hear coming out of Putin, and he's talked positively about it, thinks you can't stop it. And you watch the hash rate over in Russia, I think there's a decent chance that they're accumulating it. The one I think is kind of missing the boat, and I could be wrong on this, they're very smart people, but it's China, because they've typically been very hostile towards it, and they've been huge buyers of gold. And so my sense is that they've made the bet on gold and have probably ignored Bitcoin. I'd like to see us, in some kind of a currency reset event, which I think will have to happen to deal with the terrible inflation that's downstream here. in some kind of a currency, reset event, I'd like to see us just skip gold and go to Bitcoin. I think it would give us a strategic advantage over, China, Russia, and the Middle East. But, as a practical matter, there are probably a lot of people who are just like, oh, no, gold is tried and true. Let's go there. So we'll have to see how it unfolds. No, it is. Well, okay, let's talk about that. It's complicated, and the book talks about this, okay? So the Keynesian model suggests that you have to continually grow the money supply, and you have to have a certain level of inflation, or else you run the risk of falling into a deflationary collapse like the Great Depression. And that model is wrong. That's a lie. It's not true. But they've sold it to us because it benefits government and it benefits financiers who are generally Keynesians. Deflation is actually a very good thing and something you want, because what it means is you can buy. Deflation suggests that your economy is getting more efficient. You can buy more for less in the future, and that savers are rewarded, not debtors. It's the natural state of economies. It's the way the United States was in the 1900s or 1800s when we were on the gold standard. And it's really the highlight of Jeff Booth's book, where he says, deflation is the natural condition of a well-functioning economy. Things should get more efficient, cheaper, et cetera, over time. The problem is the monetary system we're running is structured with debt and more debt on top of the old debt. And so it's set up in a way that actually requires inflation, because if you had deflation, the debts would go bad. And so the conflict here is we're trying to run an inflationary, a deflationary economy where technology is allowing us to do more for less and cheaper and faster. We're trying to run that on top of a monetary system that needs just the opposite of that. They need constant inflation, or else they're going to die. And so it's really a challenge, to integrate those two thoughts. But I think that over time, the sound money side is going to win out, because I think what will happen is the inflation's, we're in the 70s in my view. We've had one big wave of inflation. They raised rates, they tamed it. They'll now probably start cutting. We'll get some more unemployment, and Amarillo will get broken solidly. I mean, it was broken, but then it traded right back to what it started at. And they'll start printing. They'll have to, because if they let it die, I mean, that just doesn't serve their interest. It doesn't serve anyone's interest. And so, what the government always kind of figures out, it's easier to explain away the inflation than it is to explain away an economic collapse. Like the Depression. So I think there's a very high probability we will have a serious inflation in our future.
The bill that would establish a Bitcoin reserve in Utah has made significant progress in the legislative process, having passed a crucial committee vote and moving on to its second and third readings inside the state Senate. If the bill is passed, it will be delivered to Governor Spencer Cox, who is anticipated to put his signature on it and make it a law. Any eligible asset must have maintained an average market capitalization of at least $500 billion over the course of the previous year in order to be eligible for investment under the bill, which establishes stringent criteria for digital asset investments. Only Bitcoin is capable of meeting this threshold at the moment. The measure was met with strong support from Republicans, with 4 senators from the Republican Party voting in favor of it. On the other hand, some senators, including 1 Republican and 1 Democrat, were against it, and another senator was absent during the vote. In the event that the bill is passed into law, it would make it possible for the state of Utah to invest up to 5% of its funds in digital assets. This would be a significant step toward the adoption of Bitcoin by institutions at the state level. All right, let's go back to Larry Lepard and hear some more of his insights.
Yeah, I mean, look, I mean, another thing, I mean, there are a lot of things that could save the system. I mean, cutting expenses, raising taxes, although it'd be recessionary. A huge burst of productivity growth would definitely help. I mean, and AI is certainly poised to make the world a better place and do a lot of cool stuff. AI kind of reminds me, though, of the dot-com in 2000, the dot-com bubble in 2000, which I was around for and participated in. And at the time, it was like the internet's just going to completely change the world, and you can't make money and can't lose money investing in any internet project. And we don't have enough fiber. We'll never have enough fiber. The traffic's going to go exponential from now until forever. and that was how Cisco went up as much as it did, and all the other stocks went up as much as they did. And you know what? They got ahead of themselves, and there were some really stupid ideas brought out in finance, and they failed. But the internet didn't go away. You know, the stock, some of the high flying stocks did, but it reconsolidated down to the lower level, and we were able to add. We from there we kind of went forward. So make it back. And what really happened actually is there was a change in the leadership. I mean, when in 2000, when that bubble started bursting, Amazon was just a bookseller. It was kind of a dream. Google was still early search. There were other forms of search. And Facebook, I don't think even existed until a little bit later. A lot of the businesses that became real businesses on the internet, we were a long way from having Zoom and from being able to talk halfway around the world, on our computer, right? But you could see stuff was coming. I mean, you knew there would be new technologies coming. That this internet thing had just changed the rules of the game in a big way. But it kind of outran the excitement, after a week or so. And you got to continually keep it interesting, or else you lose your audience. I think so. I mean, yes, obviously people who own Bitcoin are going to be better off, but they're going to sell. Some are going to sell their Bitcoin. Bitcoin's going to get more widely distributed, and as that occurs, and by the way, it's not too late to get in. And so as that occurs, it's going to become money for everybody. It always has been money for everybody. And the thing that's really great about it, Anthony, is that it's fairly distributed in the sense that nobody has an advantage over anybody else. Nobody. It's a fair system, and that's and human beings, smart, ethical human beings, want fairness in society as much as they can, because it just makes society better. And this is a mathematical machine for creating fairness in the money, which is we've never seen it before. It's a huge innovation. So, and back in 2000, I mean, I couldn't see what was going to happen. I mean, I knew the internet was important. I knew it was going to change things. I knew businesses would emerge, but I didn't know what they were. I mean, eBay came along. I mean, that was a good idea. Online swap meet kind of thing. I mean, there were a number of them. There's so many of them that grew out of it. And I think the same will be true of the Bitcoin space. That there are going to be all kinds of obvious implications and applications for this kind of money. And when the layer 2 network starts working really well, we'll all be zapping each other's stuff. And it's gonna get really good, but it's going to take time to have the infrastructure built between here and there right now. Yeah, I think that's right. I mean, it's the transition period is going to be a rocky and bumpy period. I sadly, I don't think there's any way to avoid that. I think some of the people who own bonds are going to really have a hard time, because the problem is, it's just a classic old problem. We've made too many commitments, too many debt commitments we can't honor. So they have to be debased in real terms, or the debt has to collapse. I mean, people who hold the debt goes bankrupt. It's worthless. I mean, I've in the past compared the U.S. government to like the family that is taking out credit cards and using the new credit line on the new credit card to make the minimum payments on their old credit cards. And that works until you find you can't get any more credit cards. You know what I mean? And then you suddenly got to start paying the debt back, and your income, that family may not have the income to do it. And that's kind of the United States. I mean, having the world reserve currency, we could just keep taking out credit cards and run up debt, and people would pay for it. But now people are kind of moving away from the dollar. They're starting to choose gold as an alternative. The U.S. bond market is not. I mean, a lot of the U.S. bond market has shifted towards the short term end of the curve. And the reason that's rumored that that's occurring is that, foreigners and others don't want to buy 10-year government bonds because they recognize the government's got to print money and they're going to get debased. If you look at the game the way it's constructed right now, the biggest sucker at the table is anyone who would buy a long-term bond. Because while they may be getting 5% interest, what they don't realize is just how debased the currency will become in the next 10 years or 15 years. It's going to be terrible. And so they won't get their money back on a real basis.
Unlike gimmicks that are only useful for a short period of time, Bitcoin has demonstrated that it is a legitimate asset with a solid track record. Even in the realm of politics, its growing influence is evident, as evidenced by the fact that prominent figures such as Donald Trump and Robert F. Kennedy Jr. have acknowledged its significance and delivered speeches on the subject at major conferences. It is no longer a concept that is on the periphery. Bitcoin is becoming deeply ingrained in the economy, and there is undeniable momentum toward its adoption by the mainstream. There is no such thing as hype in the future. Rather, the future is about Bitcoin's growing dominance in the financial system, and that future is rapidly approaching. Prior to the conclusion of the presentation, viewers are strongly encouraged to sign up for a daily 5-minute cryptocurrency newsletter. This newsletter provides investors with expert predictions, breaking news, and on-chain analysis to assist them in remaining informed.